In the silent hills of Ghana's central region, something remarkable has been unearthed. Not the gold that once earned the country the title Gold Coast, nor cocoa, nor oil. This time the hidden gem is lithium, the very mineral that fuels the energy transition of the 21st century. Lithium powers smartphones, electric vehicles, and renewable energy storage systems. But for Ghana, its potential stretches beyond batteries. It might just rewrite the economic destiny of the nation. An Australian mining firm, Atlantic Lithium Limited, plans to begin production by 2026, and if all goes according to plan, the project is expected to generate approximately $6.6 billion annually. This comes with the promise of creating up to 2,000 jobs in the central region, marking the beginning of what could be Ghana's rise as a key player in the global green economy. However, beneath the optimism lies a question that demands serious reflection. Is this the dawn of a new era for Ghana, or a familiar replay of Africa's most painful economic paradox, the resource curse? We've seen this story unfold in different corners of the continent. A country discovers a valuable resource. International headlines speak of prosperity, development, and opportunity. Yet, in the end, communities remain impoverished, ecosystems are ravaged, and foreign companies leave with the lion's share of the wealth. Could Ghana's lithium become just another chapter in this narrative? The proposed mining site, located near Ewoya in the central region, is poised to be Ghana's first lithium mine. The project, backed by Atlantic Lithium, has uncovered a major deposit of spodumene, the mineral containing lithium. Estimates suggest that over the lifespan of the mine, approximately 3.6 million tons of spodumene concentrate will be extracted, generating more than $6 billion in total revenue. On the global map, this positions Ghana as an emerging pillar in the high-stakes battery supply chain. When the deal was first made public in late 2023, there was national celebration. Government officials announced that they had secured improved terms compared to historical mining contracts, 10% royalties on gross revenues, and a 13% direct stake for Ghana in the project. Many saw this as a sign that the country had learned from its past and was ready to manage its natural wealth wisely. But good intentions alone are never enough when billions of dollars are involved. Barely 2 years later, the ground beneath the deal began to shift. To understand why this discovery is both promising and dangerous, one must consider the phenomenon known as the resource curse. It's a situation where countries blessed with valuable resources often end up economically and politically worse off. Instead of experiencing growth, they suffer inflation, poor governance, and environmental degradation. The economic explanation lies in what experts call Dutch disease. When a country receives large inflows of foreign currency from selling a single commodity, its local currency can become overvalued. This makes other exports, like textiles, food, or machinery, less competitive, weakening the broader economy. But the danger isn't just economic, it's political too. A sudden influx of wealth can fuel corruption, especially if institutions are weak. Leaders may prioritize controlling natural resource revenues over building sustainable and inclusive economies. The focus shifts from developing agriculture, education, and manufacturing to managing extraction contracts and appeasing foreign investors. Ghana is no stranger to this pattern. For over a century, it has been one of Africa's top gold producers. Yet the irony is striking. Some of the most gold-rich areas remain among the poorest, with polluted rivers, scarred lands, and struggling communities. The shadow of illegal mining, locally known as galamsey, looms large, symbolizing both the failure of governance and the desperation of the people. Could lithium be the new galamsey? A lucrative resource that lines foreign pockets while leaving Ghanaian communities to deal with the consequences? To answer this, we can look across the continent to Botswana. In the late 1960s, Botswana was one of the poorest countries in the world. But when diamonds were discovered, the leadership made a bold decision. They would not just collect taxes, They would be equal partners in mining. The government negotiated a joint venture with the diamond company, ensuring a direct share of profits. Botswana didn't stop there. They channeled diamond revenues into a sovereign wealth fund, a long-term investment mechanism that saved for the future and protected the economy from sudden market shocks. Most importantly, the funds were used to build infrastructure, provide health care, and invest in education. The result? Today, Botswana is a model of stability and good governance, with one of the highest per capita incomes on the continent. This is the road Ghana could take if it chooses wisely. But as of now, Ghana's lithium deal sits at a crossroads. With the global price of lithium falling sharply, down over 80% since its 2022 peak, Atlantic Lithium returned to the negotiating table. In early 2025, they claimed the original deal was no longer viable and pushed for the royalty rate to be reduced from 10% to 5%. By mid-2025, the Ghanaian government confirmed that renegotiations were underway, pending approval from Parliament. This development triggered concern from civil society groups and industry watchdogs. Many questioned why such a major decision was being considered before Ghana's green minerals policy was fully finalized or made public. Critics raised several red flags. They pointed to project delays that occurred even before the lithium price collapse, suggesting that poor planning, not just market volatility, might be driving the request for concessions. The fear is that Ghana, desperate to launch the project and appease investors, may accept a watered-down deal that shortchanges future generations. Meanwhile, farmers whose land overlaps with the proposed mining zone remain in limbo. They are unable to plant or harvest while awaiting a final decision. Tensions are rising, and mistrust is deepening, especially among those who remember how past mining projects unfolded. One of Ghana's ambitions is to not just export raw lithium, but to process it locally, transforming the mineral into battery-grade chemicals through a refinery. This move would add significant value and create skilled jobs. But building such a facility requires massive capital, technical expertise, and long-term stability. If the core mining operation is rendered less profitable by weak contracts, that dream of value addition becomes harder to realize. Then there are the environmental concerns. Lithium extraction is water-intensive. In areas where farming is the mainstay, competition over water could spark conflict. If not managed carefully, the mining process can pollute water bodies, degrade fertile land, and displace communities. Ghana's experience with gold mining offers a cautionary tale, where rivers have turned brown and farmlands lie barren due to reckless operations and lack of accountability. Another elephant in the room is corruption. Whenever natural resources are involved, the stakes rise, and so do the temptations. If institutions lack transparency or enforcement power, even the best-sounding contracts can become tools of exploitation. Already, citizens and opposition leaders are demanding clarity on the renegotiation process. They fear that secretive changes could benefit a few individuals at the cost of national interest. Perhaps the most dangerous factor is market unpredictability. Lithium, like oil or gold, is subject to sharp price swings based on global demand, technological changes, and shifting geopolitics. Anchoring a national development strategy on one commodity is always a gamble. This makes economic diversification not just smart, but necessary. Ghana must think beyond lithium. The revenue from this mineral, if wisely managed, can be used to strengthen sectors like agriculture, education, and technology. It can power industrialization, fund research, and reduce dependency on imports. It can help Ghana become a producer, not just a supplier of raw materials. But that requires vision. It requires courage. It requires putting the long-term interests of the people above short-term political gains. Right now, the lithium deal is still awaiting final approval in Parliament. The debates are loud, the emotions strong, and the stakes monumental. This isn't just about one mineral. It's about the direction of Ghana's development model. Will the country follow the path of Botswana, where wealth from beneath the earth uplifted the people above it? Or will it stumble into the well-worn trap of exploitation and regret? The answer will depend on what happens in the coming months. In the end, Ghana's future does not lie in lithium, or any mineral for that matter. It lies in the choices the nation makes today. It lies in demanding transparency, protecting communities, enforcing environmental standards, and negotiating from a position of strength, not desperation. This is not a lottery, it is a responsibility. The lithium under Ghana's soil is a resource, but the real treasure is the people. If this mineral helps them rise through education, jobs, clean water, and opportunity, then the country will have truly struck gold.